the liquefaction happening actually offshore and straight onto the tankers to be exported out to wherever the gas is going. So in terms of a floating LNG project, this would involve saving in terms of capital costs, because you don't have these massive pipelines. You don't have to pipe the gas back onshore to process it before exporting the gas out. So it is an option at the moment, and I guess that they will be looking at the option for that. The other option that hasn't been talked about is that Browse just lays in rest until prices justify this type of project going ahead. There's already been quite a bit of money which has been spent on this project, but $45 billion at a time when we are seeing massive cost blowouts in this LNG space. I think the market's going to be really quite happy that Woodside Petroleum's just taken a bit of a step back and now looking at alternatives.
But are they also missing a step in terms of being able to gather customers, start being one of the first to supply LNG to what is expected to be a growing demand out of Asia? I mean, lots of competition, particularly North America as well as East Africa, very much in line. This is a step back for Woodside and Shell.
I guess if we have a look at Woodside Petroleum, it already has a number of different growth options there. So I guess a minor negative may be that it does miss out on potential customers in that growing part of Asia. But we know that Woodside Petroleum has recently bought up a controlling stake in Israel's in a large oil field, the oil field, which Leviathan, which still needs to be developed there as well. So there are still some growth options, some big growth options on the table for Woodside Petroleum. It does have its plate full, and I think the market's really going to back its decision on Browse. It's not wholly unexpected.
But aren't there also question marks over Leviathan, particularly in regards to having a JV partner like Shell? A lot of these guys already have sizable interests amongst the Gulf states. There is some geopolitical issues about also being seen to be funding and doing business in Israel.
Absolutely, and that's one of the things to be watching now. Shell has made no secret that it's not a natural holder of Woodside Petroleum, and it currently holds a 23% stake. So a lot of speculation that now's the time that we could see Shell offloading its 23% stake in Woodside Petroleum, and that's been overhanging the shares for a while now. If we do see this stake being offloaded, generally it would be a positive for Woodside Petroleum in the medium to long term. But of course, it depends on how easily that stake is offloaded, at what price, and to what type of buyer. So I guess the fact that such a large stake is perhaps ready to be offloaded brings about the question whether Woodside Petroleum could potentially be a takeover target as well. That 23% stake would be a nice foothold into the company. So a lot of question marks around Woodside Petroleum at the moment, not only because of the Browse project, but also its relationship with Shell, and of course the other projects that it's looking at in order to drive growth.
Evan, if we can just talk about
in the greenback, or if the yen carry trade continues to strengthen, at what point, at what level do we start to see negative impacts on the equity market?
I think the Aussie dollar in the last couple of years has already had a negative impact on the equity market. You only have to compare the performance of the Australian share market to the US stock market to see exactly what the currency can do. If we have a look at the US stock market, we've seen the Dow Jones Industrial Average and the S&P 500 pushing all-time record highs, reaching all-time record highs overnight, whereas the Australian share market, we're still quite far away from the 6,800 type of highs that we saw for the ASX 200 index back in 2007. Now, key reason for that is the currency. If we have a look at the US stock market, companies in the US have been growing earnings quite substantially, especially in comparison to the Australian market, but helping those earnings is the very low US currency, which makes products and services that the US offers more attractive internationally, whereas here in Australia, that very high Australian dollar has been a difficulty for the exporters, and you only have to have a look at the manufacturing space to see what kind of impact that has. So the very high Australian dollar, really a key headwind for the Australian companies as well as the Australian equity market, and I think with the low currencies both in Japan as well as in the US, you'll see both of these markets outperforming Australia.